Welcome, everybody, to another episode of the Everyday Trader. Good to be with you. This is Greg Jensen, CEO of Options Animal. Waiting with anticipation for an earnings release after the close today. Eric, I'm sure you are too. In fact, I know you are. You and I were just talking. We were just placing a trade.
Yeah, I just placed a trade. So I'm looking at my screen and it looks something is messed up there in the background. I think it thinks I have a green screen, so it's seeing holes and you see the holes between like there.
Ah, yeah,
That's
kind of cool.
I'll figure that out. It's because I switched through different accounts and hopefully I'm not distracting people too much. Yeah, Apple earnings after the close. I don't think it makes a lot of sense to, well, maybe we should talk about it. What are you thinking?
Well, I'm positioned bullishly going into Apple earnings. I do have a trade on as well. And it's for me, it's more along the ideas that I think Apple's already got a lot of its bad news priced in since their last earnings report. If you look at a chart of Apple and its performance year to date, it's one of the worst performing members of the Qs or the S&P 500. It has not had a good year so far. And I think there's potential upside with this earnings report. Now, that doesn't mean there's no guarantee, right? I don't know what their earnings are going to be like. They may have another shoe to drop at this earnings report that's coming out here in about 30 minutes or so. But
I got the answer for you, though. I'll guarantee you this 62% of the time, every time, Apple's up.
62% of the time, every time. Nice.
You remember that
Yeah.
from Anchorman, right?
Yep.
Yeah, it's like what 75% of the time, it works every time.
One of the better movies in Will Ferrell's career, in my opinion, if not his best movie. I know he's had a lot of blockbusters, but
It is really not politically correct. I don't know if you've gone back and watched some of it now. I know you're thinking like Wales and San Diego. There's some other stuff there, but there's some stuff and you're like, whoa, you would not put that in a movie today.
yeah.
I'll just leave it at that. So, but it is funny, man. That's a hilarious movie. That's why I like hanging out with you. You pull those quotes out just like me.
No, pulling us back to Apple. I think I think the likelihood is more on the side of being bullish after their earnings report, especially if we can get some type of conversation from Tim Cook and team about artificial intelligence. I know between the last earnings report and now we had the whole transition where they let go of or I shouldn't say they let go of them, but they stopped working on the project of a self-driving car and an electric vehicle with an Apple logo on it, and have taken that team and put them at work in AI. Is that the right move? I don't know. We'll see. It will be interesting to see what Apple has to say, particularly about artificial intelligence. I also think one of the bigger stories that Apple is going to have to continue to explain is what's going on in China and their exposure there. So there's a lot of still potential risks for Apple, but I think a lot of that's priced in. The economy is doing well. We heard Fed Chair Powell, not to turn the page there yet, because I'm sure we're going to talk about the FOMC meeting that happened yesterday, but the economy is doing strong. We heard that yesterday. We continue to see pretty solid earnings reports from a lot of different places. So, yeah, we'll see. I've got a bullish trade too. So,
Well, full disclosure. So I have the trade that I have going on Apple is a covered call that's in the money. So I'm more than happy to sell my stock, and my cost basis is 160. So I don't need to put excuse me. Normally I'd put it in some sort of a collar trade, but since I already have that covered call, you and I were talking, and just minutes ago I was filled on a long call. So I bought a couple of long calls just in case we get the big pop up here today. Who knows? But this chart that I'm showing right here, this is from Koyfin, and this is going back looking at a 10-year chart of Apple. And the line on the bottom is the price to earnings, the next 12-month forecast for earnings. And what's happened, you and I have been trading Apple for a very, very long time. And remember when somewhere between 10 and 15% was typical earnings, the ratio, the PE ratio, sort of a measure of what the market is valuing it at. And we saw this big change that happened through 2020. And the argument was that Apple is becoming more like a Netflix. And that's interesting that we say that, because I think all companies probably migrating towards an Apple, not Apple migrating towards them. But that's the notion, was that they're migrating from a hardware company to more of a services or online digital content, where the gross margins can be higher. And that's why there's so much focus on the services side of the business with Apple, is that it can make it makes tremendous gross margin. The App Store, they take a huge cut of every product that gets sold through there, everybody's apps, and you got to be on the App Store. But I think what we're probably due for is to get a recalibration of bringing something back in. I don't think the PE ratio is going to come back down to, say, 14 or 15, but somewhere in the mid 20s, we're not too far away, would maybe be what this is what in my read, this is what's going on, is that the market is repricing um the gross margin. Your thoughts on that?
Yeah, I think that's fair. I mean, you know me, I'm a fundamental at heart. I'm a fundamentalist. I think valuations do matter in the long term. I think in the short term, and by short term, I mean sometimes a year. That's a short term in fundamental terms. Um, fundamentals can be ignored. And like you said, in 2020, when they repriced the PE for Apple, I think the same argument is being made to justify the valuation of NVIDIA right now. Um, and are those valuations justified in the short term? Probably not. Over the long term, maybe. And it all depends exactly what you said, the price and the earnings. And we're seeing that reprice a little bit right now. My hope is on Apple's side that it's not the price that has to come down any further to get it back into a mid 20 or low 20s PE ratio, but rather it's the earnings side that will start to accelerate the bottom part of that denominator of that equation, so that we can see a 20 PE again on Apple. But for them to do that, you're exactly right. They do have to have some other form of revenue growth and earnings growth that's not just selling more iPhones and selling more iPads. It's got to be, how are they now with this ecosystem that they have built out and the use of their app store? How are they going to engage AI to further monetize that giant user base that they have, that they've collected over the years, me being one of them? I mean, I'm right now recording this video on my MacBook Pro while I sit here with my iPhone 15, getting text messages from my wife while we're while we're recording. I'm using their hardware tools, but the software we're using has very little to do with Apple.
What do you
And
think would have happened if they had a car? What do you think would happen to their gross margins if they had a car?
oh, they'd get crushed.
They would
I
get
think it's
crushed.
even worse. Yeah. So
Yeah,
I think it's a good move they're making. And obviously, anything in regards to artificial intelligence, because it's all software, at least their side of it would be, right? I don't think that you're going to see Apple try to get into, even though they do have their own semiconductors that they make for their computers, I don't think you're going to see them try to compete with NVIDIA in that space, um, for the processing power of it. But I see them more competing with the likes of Google and Microsoft more on the software side of it.
right.
But we'll see. We'll see.
Well, I think the key that we're all looking for here is AI. But I mean, AI is, I mean, I think it right now, it's the price of entry that they there's no product that is more well suited for AI than Siri. I mean, maybe Amazon's Alexa, but I think more people have iPhones than have Alexas. But it's a virtual assistant. It is supposed to be AI. And so there has been some papers published that are pretty interesting, that Apple does have some technology that's interesting. I don't know. Do we have this conversation about um, AI is not capable of, like, if I pick up a picture, well, this is see-through so you can see it, but if I ask AI to tell me what's the other side of this look like, um, using a large language model, it can't. Your brain, you know that this part's round, so you assume the backside is round, and that's not how AI works. It's a simple explanation, and your brain doesn't work. It, large language models work on language. Your brain has its own language, which is not English. And so when you think of an object, you don't think of, oh, a cylinder that's this shape. You think about what you think about it as an object, and in your head you're visualizing what the other side of it is, so you can rotate it in your head without having to use words. So large language models are not capable of that. And there's this I think it's multimodal input that Apple did release a paper that they've got a model that handles that. So there's some potential there. I just don't know how close we are to commercialization. And what are your thoughts? Do you think Tim will talk about AI in this call, or do you think he'll wait for the Worldwide Developers Conference?
I think he has to talk about AI in this call. If he doesn't, then I think the stock gets punished.
Listen,
If he
though,
doesn't at least mention that they're working on something, he may not have to give a lot of details, but I think he's got to give some hope to shareholders right now in this meeting of, we see the importance of AI. We're adopting it too, just so you know, because that's been the argument
okay.
against
So
them.
so lip service, not an announcement. I think yeah, I guess my gut tells me he's not going to make an announcement. He never makes product announcements, and that's the question. All the analysts are going to be asking about products, and he's going to say we don't discuss future products on the shareholder
On
calls.
earnings calls. Yeah.
That's earnings calls, and that's I think one of the things, though, I love about Apple management, and this has always been their case, is they have the highest integrity. And I'm going to the Berkshire Hathaway shareholder meeting this weekend, and one of the things that I read in um, Robert Hageman's book on it's called The Warren Buffett Way. One of the things Hageman talks about in these subjective analysis, everybody talks about how Buffett is superior at doing these straightforward analyses, evaluation, looking at what he calls owner earnings, which is something similar to free cash flow, without getting too wonky on it. But then he does a discounted cash flow, and it tells you basically, if you own the company, this is how much money you think the company's worth. That's a great metric, and a lot of people work on their spreadsheets, but they forget the other half. He's got like 7 other key areas that he looks at, and the number one is the integrity of management. Are they more likely to be doing what they need to do to gig the stock price for whatever reason, because that's how they're incentivized to get the stock price highs. And I've worked for companies that do that. We pull sales forward from next quarter, and we beg, borrow, and go out, and we got to make a quarterly sale. And here we are at midnight trying to get things out the door so we can say shipped it by the end of the quarter. I've worked for companies like that. I don't see that happening with Tim Cook. I think he's a long-term player, and he's not afraid to share bad news if he's got it. So I don't think he's got the pressure to announce what their long-term strategy is. Now, I fully expect that to happen in June at the Worldwide Developer. By the way, Tim Cook goes to the shareholder meeting every year. So I've seen him there in the past. So I'll stop him and I'll have a conversation with
Yeah.
him.
I was going to say, get him. Yeah. Corner him somehow.
Bill, Tim and Bill sit 2 rows away from each other. Bill Gates is there as well.
Yeah. I knew Bill went every year. So he
And
and he,
you know what, 2 years ago,
event.
what other Bill went?
It was Bill Murray, right?
Bill Murray was there. I'm
So
looking forward to this. I didn't mention that I was this wasn't gonna be a topic for today. We didn't talk about it, but the first year, obviously, Charlie Munger passed away. God bless his soul, rest his soul. So it'll be interesting. I'm sure there'll be tributes to him, but obviously Warren's not going to ever stop until he can't. He's going to keep going until he can, but he probably doesn't have that many more in him. So It'll be interesting to see what I learned. Maybe we'll maybe do a follow up next week, and I can share some of the experience.
Yeah, that'd be good. Definitely get some follow up on that. So, you know, I hope good things for Apple. I mean, I've been an Apple fanboy for a long time, 20 years to be honest, that I've been an Apple fanboy, and I'm hoping the best for this earnings report. Um, if it goes down, I'll be all right with my bullish put trade. I'll adjust it into a collar trade and still be happy. But let's cover another topic because I think the biggest question mark that continues to um, plague, influence, excite. I don't know what other types of words I can use to help describe the volatility that is in this market right now due to arguably uncertainty that is coming from the Federal Reserve right now in regards to, are we going to cut? Are we going to hike? Are we going to stay the same? Where in the world is the Fed pointing right now? And I don't know if we got any more clarity from yesterday's meeting. Do you?
Well, yesterday was really weird because I'm sure we talked about it. We watched the market. The market, as soon as the numbers were released, skyrocketed. I mean, the S&P 500 went up, and then by the end of the speech, it came down. I don't know that there was anything particular in the speech that caused the pivot. I did want to talk specifically about some of the things that I heard and get your reaction. But the one thing that I take away is if we look at the FedWatch tool, which definitely has its limitations. If we look at the let's see, probabilities, here's easiest way. Wow, this is interesting because yesterday, um, the first one that was not, so 525, 550 is the current rate that we have, and all of these were blue except for December. So, well, I shouldn't say all. So, June, July, September, and November were all, the highest probability was for not raising rates, and it was showing that December is the first. So it's shifted a little bit, and now we're looking at I don't know what changed, but September. So we're still quite a ways off. I still happen to believe that that's a little bit speculative. So yeah, yesterday we were 520. The higher, this was the highest probability. That's yesterday. This is today. So a quarter point hike is what this believes. But man, this
Cut,
thing has been
cut.
cut.
A quarter point cut. Yeah.
Quarter point
I know
cut.
that's what you want to talk about is the potential that they may hike next.
You
But
know where I'm going. You know where I'm going.
but yeah, this data is showing cut. And I think I agree. I think the markets are uncertain where they want to be right now. Maybe the unemployment data got released today. Got like unofficially released.
Yeah.
It
So
got leaked.
tomorrow, yeah, tomorrow's
Got leaked. The
unemployment numbers.
tomorrows are unemployment. Maybe we're gonna have a
Ooh,
really bad unemployment report tomorrow.
that's it does get released early and it is embargoed. It's not supposed to be released, but to the public, but some of the press people do. I guess yeah, it's yeah. I
We're
remember,
fueling
yeah,
conspiracy theories here.
what's that?
I said we're fueling conspiracy theories here.
Well, you and I, when we were at the Rocky Mountain Economic Summit, I was sitting there listening to Waller speak, and then Nick Timmeros's article came out saying what he said. And I'm looking like you're still speaking, and here it is in the Wall Street Journal what you said. And I asked Waller about that later, and he said, "Oh, we give a courtesy copy of my speech." I said, "But your speech changed." He's like, "Yeah, it did." Yeah. Anyways, so speaking of speaking, um, we wanted to talk about this press conference. So I'm going to share the particular question. This was asked by one of the reporters from Fox News. I'm going to ask you to take a close look at Chair Powell's body language and the words that he says, and listen to his voice. So I'm just going to run this through my mic right here. So hopefully you can hear it okay. And let's just hit play.
Thank you, Mr. Chairman. Edward Lawrence from Fox Business. So GDP growth is about 2%. Inflation, employment is about 4%. It feels a lot like a steady state, and we have 3% inflation. So if the data remains the same that you're seeing, and I know you said you don't see a rate hike, but it stands to reason that you would need a rate hike to get from 3 to 2% inflation. So was there any discussion about a rate hike in today's meeting? And are you satisfied with 3% inflation for the rest of the year?
Well, of course, we're not satisfied with 3% inflation. 3% can't be in a sentence with satisfied. So we will return inflation to 2% over time, but over time. And we think our policy stance is appropriate to do that. So if we were to conclude that policy is not sufficiently restrictive to bring inflation sustainably down to 2%, then that would be what it would take for us to want to increase rates. We don't see that. We don't see evidence for that. So that's where we are.
Was there discussion about a rate hike at all?
So the policy focus has really been on what to do about holding the current level of restriction. That's part of the policy. That's where the policy discussion was in the meeting.
Yeah, I wanted to follow the 3%. Is there a time frame of?
So that was the point. I from that. What's your reaction? Do you think they talked about hikes? He didn't answer the question.
He didn't answer the question, and he was normally Chair Powell is very polished. He doesn't stumble over his words very often. He was definitely, yeah, he was struggling right there, which tells me that yes, they have discussed it because they know they haven't conquered inflation. And so they know that they can't stop at 3%.
I know, I know because I know people who are sitting in that room and had a candid discussion about there might be a need to raise. If things don't come down, we're going to have to raise. We're going to have to hike. And I would imagine it would be prudent for them to say, hey, this is not off the table. The meeting minutes come out in 3 weeks, but the meeting minutes are a summary of what was said. There is a transcript that will be released, unfortunately, 6 years from now. So we'll all stick around for 6 years to find out. But I mean, I sense this shift in tone. We've talked about this for a while, that if we don't get inflation under control, I know that there's other concerns out there. Somebody mentioned that if he doesn't cut rates, he loses credibility. I have no idea what that means. Like what
I don't either, because I think a lot of the markets embracing the idea, and it wasn't just the markets. I mean, I guess you call all of the big Wall Street firms. There were a lot of Wall Street firms at the end of last year, from Deutsche Bank to Morgan Stanley to Goldman Sachs, who were saying, we're cutting rates next year. We see 3 to 5, maybe upwards of 7 rate cuts in 2024. And now, obviously, we're pricing that all back out. But it wasn't the Fed who said that. Yet there were a couple comments that maybe you could have read into, where Fed Chair Powell and I think Chris Waller also said, hey, we're seeing some progress on inflation, which they were, and we still are to a certain extent. Well, maybe we're not anymore because it's starting to heat back up again, but we're not at 9% inflation anymore. We are down at 3.5% and 4% inflation, which is much better than 9%. So we have seen progress, but that doesn't mean the war is over. And I think the comments that were made at the end of last year were really along the lines of, well, of course, when we've conquered inflation, we feel it appropriate to start to cut rates again and get it back down to a lower level. When we've conquered inflation, that's the part that I think all of the people who got on the rate cut bandwagon at the end of last year just assumed that, well, the Fed said that they're going to start to cut rates. They didn't include the latter part, when we've conquered inflation, and they haven't. And I think you're right. I think the Fed's been pretty clear on their message that they're data dependent and they're not going to settle for 3% inflation. They want to see their number at 2%. So
Yep.
we'll
They're
see.
not going to change. They're not going to change the yardstick. They don't like the yardstick, so go get a new yardstick. People are throwing out these alternate measures of inflation, and I would love to see rates come down. I think it would be a great thing. Unfortunately, I don't. When they started raising rates, they were expecting something to break, and nothing's broken. We saw this bank crisis, which is about a year ago, and actually the regional bank crisis story is raising its head again. But I don't know that that's because of the Fed that those things are happening. Which I mean, and I'm very concerned about our debt level and the ability to service debt at higher interest rates. It could be killing us. And at some point, I want to retire. So, this fixed income and inflation is very important to me. But I, I don't know. We'll see where this heads. I'm in the camp that we possibly could see a hike. Hopefully not before the end of the year, but we got more data to come, and that's one thing they've been clear on. So I don't know what it means to say the Fed loses credibility in terms of the dot plots. They were on 3 rate hikes last year from the dot plots. They're still what is the last quarter they were published? It was 3 dot plots, but that survey is a little bit different. It's asking what do you think everybody else is going to do, not what do you think we should do. It's where do you think the Fed policy will be? And so it's kind of like asking what are your peers going to do? So I ask a slightly different question. I don't think the dot plot people have said the Fed told us, and like that's not what that is. It's something different. So the question though is, I think if you were to know 6 months ago where we would be today with inflation and with Fed policy, I would not have predicted that the market would be, trading above 5,000. I thought we would, we're bouncing close to 5,000 here, whatever, 51 or somewhere around that.
Well, I wouldn't have either, and you guys, know that from the conversations we've had, and we've recorded on YouTube. You can go back and watch them. I haven't been bullish, other than the one thing that I have mentioned is that I do still believe we're in the midst of the inflation of an exciting new bubble. And I say it's a new bubble because I know artificial intelligence isn't new. It's been around for a long time. We're seeing it progress, but it really wasn't until about a year or so, a little over a year ago, when NVIDIA made the advancement in their chip that has allowed technology to really start to leapfrog forward. And then of course the release of ChatGPT, one of the first public facing uses of AI. And I think the markets and the economy is excited about AI. To come back to our discussion that we started with in regards to Apple and their need to get on this bandwagon of AI, because I think that is what saved the market from really being, I think, arguably had another really bearish year, because the Fed has not cut rates. They have been still restrictive because they need to be to control inflation, but the markets have been able to ignore it. Now, you could arguably say it's a perilous thing that they're ignoring, because being the fundamental based investor that I am, I know those fundamentals eventually will come back to roost, but it may be years before that happens. I think right now, to me, it still feels like the bubble's inflating.
Well,
There's still a lot of excitement.
I keep hitting refresh over here on the investors relations website of Apple and watching the futures to see, or the after hours pricing on Apple. It's up a little bit. So it hasn't been released yet. So in the next 4 minutes, it should be out. But let's pivot and talk about something a little bit different if you're ready. And that is, I want to share some other useful features that I started employing this week with ChatGPT. So I use ChatGPT almost every day, or some version. I use Grok, I use ChatGPT, I use Copilot, I use Gemini, and Perplexity is actually one of my favorites. So Perplexity Pro, and but probably the one I use the most is I pay for ChatGPT 4. And so what I've been trying to do is use it here for analysis during earning seasons, when you get these 10 Qs that come out that are 70-80 pages and probably about as exciting as watching paint dry. and you can read other people's summaries of them. So I queried ChatGPT and I asked it, I said, what questions should I be asking you? That's not where I started. I said, when reviewing a 10K or a 10Q, what information should I be looking for? It gave me a nice list, and I had some back and forth on what I really wanted. And then it gave me a list. It said, these are like the 8 things you should be looking for. And I said, great. Can you create a chat GPT prompt that I could use to do that? And it did. And what I'm going to do for people listening right now, I'm going to copy and paste this into the notes section down below. So you'll be able to see this analysis request here. And so here's ChatGPT costs $20 a month. This is what allows you to upload a file. So I'm going to upload the most recent analysis by AMD. So this is AMD's 10Q that was just filed. And I'm going to do this analysis right now. So I'm going to take this information in here. So it says company name in here. So in that space, I'll type in AMD, but I'm going to select all, copy, and then I'm going to hit paste and scroll up to that section there. AMD. And we're doing this in real time. So memory updated. Let's delve into AMD. So this is going to break it down into several different areas. Are you ready? Now, one of the things that it cues you along the way and asks you, are you ready? And this is because it doesn't want you doing this huge analysis and just using compute power if you're not going to be actually on the other side of it. Ooh, okay, it's out. Apple, let's just pause. Let's pop over to Apple. Apple is up big. Well, not big, but going. So I guess the earnings were good.
Yeah, we're
So up
I'm throwing it up.
$3. Hooray for my calls. So we'll see what happens. Sometimes we get these quick moves and turns around and goes the other way. Don't count your eggs until they've
Yeah,
hatched.
that could be a speculative guy too.
Yeah.
Some automatic bots that just buy as soon
Let's
as
get
they-
everybody buying. So
Yeah.
yeah, suckers are be very careful trading in the extended hours. But I mean that how does that get released and somebody reads that information that quickly? I guess computers can do it. So this is definitely computers trading because nobody's read that report because I'm on their website looking for their filings right now, and there's nobody's their website's not posting, but this looks good. We'll come back and revisit this later. So here's a really quick analysis, and you can query it to, I'm not going to go through this report, but I'll show you that I've used this for Tesla this week. So I did the same sort of analysis with Tesla, and I did the same thing with Microsoft. And it does a pretty nice job where you have to know somewhat what you expect and make sure that it's giving you reasonable answers, because sometimes it hallucinates. That's the term they say with AI, is it will hallucinate from time to time and give you answers that it thinks are right, but are wrong. But it's certainly something that would save me a lot of time, and I'm gonna pay attention to a lot more company filings than I otherwise would because I can use ChatGPT to do a lot of this work for me. Just another one of those examples of, I think things we're just gonna take all this for granted in the future, just like we take the internet for granted. It's just another useful tool for evaluating. Helping to do your work. And the reason what prompted this is one of our clients is overwhelmed by the amount of information that we share at Trader Oasis. We've got this institutional library. We share research that's timely and actionable. But the problem is there's, as you 15 to 20 reports and you can't read them all. I actually use ChatGPT to summarize those. If I see a report that's interesting, I'll pull the report in here and say, please, share any key points. Let me see if there's so this is here's an example of a Citibank report. So it goes through and gives me the highlights. This happens to be a European one, so Stellantis and Mercedes-Benz and Volkswagen. But this report itself is 12 pages long, and real quickly it's going to give me a summary, and I might decide that, oh yes, I need to go read more of this. This is another helpful tool. So if you get a long PDF of something that you don't want to read, and you need ChatGPT 4 to do this, it won't work with ChatGPT 3.5.
Here's the official numbers if you haven't seen them yet. 90.75 billion revenue, estimated 90.33 billion, earnings per share of $1.53, estimate of $1.50. I think the big thing that just excited the market was they just announced $110 billion share buyback. So
there you go. You can't beat them, join them. Like, that's a way to get your price up. Keep buying back your shares.
Buying back shares. We're at, the stock's up 4% right now. It's at 180 in after hours. So
nice.
Yeah. Good trade for me today too on Apple. So
I don't usually buy calls prior to earnings, but I did today. So
mine is a combination trade. Those of you who follow us on the trades over at Trader Oasis saw me place this trade earlier today. It's a combination exploding bull put type of trade that I did that should work out nicely, assuming these prices hold tomorrow, right? That's the other thing you always have to make a note of, is sometimes the after hours market, like you said, is not always indicative of where the cash market's finally going to open up tomorrow morning. Once we start trading, once I can start executing option trades. So we'll see what it does in the morning, but so far it looks pretty good on headlines anyway.
So you did the short-term long call and a slightly longer term bull put, huh?
Yep.
That looks like it'll be interesting. Yeah, right now you're well above your break even for a nice little trade.
Should be a winner tomorrow again, assuming these prices hold. So
yeah, if by my math, you're about a 60% return on risk right now. So it's going even higher than that. No, you're like 100% return on risk now. We'll see if things hold. Of course, we haven't seen guidance yet. So
yep, I was gonna say we got to wait for the conference call, right?
Look, now we got to price right back down to where it was. So right now it's right back down where it was. So.
That's interesting.
Oh, now it's back up. So this is
why
you don't trade
on a limit order.
This is somebody getting screwed in the after hours. That's
exactly. That's exactly what that is right there.
Oh man. All right. Yeah, exciting times. So good stuff.
Good talking to you.
Looking forward to seeing what happens in the conference call. I'll follow up maybe next week. We'll talk about what we saw in Omaha.
Yeah.
And
no,
let's one of these years you need to go. You've been saying, Warren's not going to be around forever.
I know. I made them again last year. I made the mistake of buying an old defunct restaurant, and then I remodeled it last summer. And now I'm actually, stuck to helping my wife run it. So can't go this year either.
Maybe we should schedule a summit in Omaha, and that will make you go.
There you go. Then it'll make me go to Omaha. All right. Okay. Thanks, everybody. Good to see you again. We'll see you all at the next one. And Eric's good to see you.
Yeah. Take care. Bye.